XRP's chart action is telling a clear story. Price has been wedged in a descending triangle, pinning lows around $2.70 and highs near $3.12. This classic consolidation pattern is often a precursor to a powerful breakout, with the move's magnitude roughly matching the triangle's height. In practical terms, cracking above the $3.12 trend line would validate a bullish target around $4.80. In line with measured moves noted by analysts, it even opens the door to higher resistance zones. For example, one trading analysis has drawn Fibonacci-based targets near $4.80 and about $7.10 if the rally really takes off. These upside targets align with retracement levels from the prior bull run, a key fair value gap zone between roughly $2.35 to $2.65. Coincides with the 50 to 61.8% Fibonacci retracement of the earlier advance. In short, the technical setup is as bullish as it is strategic, holding above the $2.65, $2.70 support and breaking $3.12 could catapult XRP toward $4.80 or beyond. We saw after similar patterns in Q1. Yet every bullish pattern carries built-in caveats. A decisive break below $2.70 would nullify the triangle setup and likely send XRP back into that $2.35, $2.70 zone, possibly retracing toward $2.50 or even mid-$2.30. Indicators like a DX and RSI on daily charts warn that momentum is thin, underscoring that a failed breakout could trigger fresh selling pressure. In other words, while a pop above the descending trend line targets $4.80, $7.10, a drop beneath the base would cast doubt on any rally. Traders need to watch that pivot closely. Sustaining support near $2.70 is crucial to keep this triangle as COIL scenario alive. Behind the scenes, XRP's futures and on-chain data are quietly reshaping the risk profile. CryptoQuant's Binance leverage ratio has recently fallen back to the mid-range of its historical band. This metric, open interest versus exchange reserves hitting neutral levels, suggests that traders are no longer wildly over-leveraged, meaning the threat of a cascade of liquidations is greatly reduced. In fact, futures open interest has plunged from roughly $11 billion down toward $7.5 billion over the past several weeks. This 30% plus drop reflects a massive deleveraging. Many highly leveraged positions have been flushed. The upshot is a cleaner slate for price with less crowded longs or shorts. XRP can consolidate or rally without risking a self-fulfilling waterfall of forced selling. On the spot side, similar signals appear. The cumulative volume delta CVD for spot XRP, which tracks net buying versus selling, has ticked toward neutral to slightly positive, hinting at quiet accumulation. Buyers are stepping in on dips, even as price edge is lower, a classic sign of institutional or smart money support. Meanwhile, funding rates on futures have eased back to normal levels, showing that earlier frenzy in perpetual markets has cooled. In sum, the futures order book data paint a market that has healed its wounds. Less leverage, thinning speculative positions, and subtle net buying. This sets a more stable foundation for a potential rebound. That said, some on-chain metrics are cooler. Active engagement on the XRP ledger has sagged. Sentiment data indicate daily active addresses plunged from a Q1 peak of 612,000 down to only 40,000 by early May. Transaction counts have likewise collapsed. Such slumps in network activities signal lower liquidity and interest, a possible headwind to any rally. In contrast to retail, however, whales have been quietly accumulating. Large addresses holding 10 to 100 million XRP increased their share of supply from roughly 10.9% in April to 12.3% by early May. And even bigger wallets slightly added onto. This fat tail accumulation suggests strategic buyers are positioning for something. Caution is still warranted here. Previous spikes in whale exchange inflows often marked local tops. Indeed, a recent CryptoQuant report shows whales significantly moving coins to exchanges when XRP was near $3.60, a classic sign of profit-taking. If large holders continue to offload, this could cap gains and drag price back toward $2.60 support from the derivative side. The cooling of volume is another noteworthy metric. CoinGlass data reported by Cointelegraph confirmed that open interest in XRP futures has dropped sharply as prices eased. This reflects traders stepping back. In practice, such a drop can precede a bottoming process as leveraged shorts liquids exit. It opens up a buying zone, the so-called fair value gap around $2.33, $2.65. In fact, traders are eyeing that zone closely as a probable demand floor. If OI stabilizes there, history suggests accumulation and a springboard for the next leg up. That context adds to the narrative that the current pullback may have purged excessive heat, leaving a healthier structure. The third and perhaps most potent reason is macro-regulatory catalysts. The SEC's case against Ripple, which plagued XRP for years, has finally cleared. U.S. courts have effectively ruled that XRP itself is not a security, removing the overhang. With that hurdle gone, the door is open for major institutional interest. Evidence of this is obvious. BlackRock, the world's largest asset manager, has placed one of its own, Maxwell Stein, Director of Digital Assets, on the speaker list for Ripple's upcoming Swell 2025 conference in early November. BlackRock famously helped launch spot ETFs for Bitcoin and Ethereum, so its appearance on an XRP panel, even without announcing an XRP ETF, is a bullish psychological sign for the market. More concrete are the ETF filings. Firms like Grayscale, Bitwise, 21 Shares, WisdomTree, and others have all submitted applications for spot XRP ETFs. These proposals, if greenlit, would create a hugely liquid, regulated channel for institutional and retail money into XRP, even traditional Wall Street players are innovating. Amplify Investments has just filed for a unique options income XRP ETF that would pay out monthly yields from covered call strategies. This scheme underscores how seriously the finance world is taking XRP's future. The SEC's calendar is now the biggest catalyst. Final decisions on these myriad spot XRP ETF applications are due between Oct. 18 and October 25, 2025. Analysts note that those clustered deadlines could be a game-changer. One or more approvals could usher in billions of dollars of new inflows. In fact, some forecast an XRP ETF, if approved, might attract $5 to $8 billion, echoing the impact of Bitcoin's ETF launches. Of course, this timing also injects uncertainty. The SEC has been known to delay or split decisions, and there is no guarantee of approval. Market watchers caution that even with a positive legal backdrop, approvals are not certain. A delay into late 2025 or beyond, or any denial, could trigger a wave of relief rallies followed by fade-outs. BlackRock's official stance, according to recent coverage, is that it currently has no active XRP ETF plans. Thus, while Swell and ETF filings fuel optimism, they are not slam dunks until official green lights come. In summary, the bullish thesis for XRP rests on these three pillars acting together. 1. Coiled technical structure ready to break into clear upside targets. 2. On-chain futures indicators that have cleansed risk and hinted accumulating demand. And 3. Major macro catalysts, legal clarity, and ETF prospects lining up in the coming months. Each pillar has its counterweight. A failed technical breakout, lingering network inactivity, or regulatory disappointments would dramatically alter the picture. But if all line up, the reward is significant. On the upside, the fractal analysis suggests gains on the order of 60 to 85% are plausible, which would comfortably carry XRP through $5 and toward those longer-term targets near $7.10. In fact, some traders already pencil in for $0.80. As a near-term waypoint, active traders know that such narratives are conditional. A conservative approach would monitor the $2.70 support and $3.12 resistance as the defining battleground. A break above $3.12, confirmed by strong volume and momentum, would signal the first leg of this rally thesis is valid. Conversely, watching where whales send their next moves, whether to exchanges or cold wallets, will hint at appetite. And ultimately, October-November will be critical. An approved ETF or any regulatory surprise could either cement or shatter the current bullish wave as a strategic voiceover for traders. The verdict is that XRP has constructed a potentially explosive setup. Confluence of technicals, on-chain health, while macro tailwinds makes $5 a realistic target if conditions remain favorable. But prudent traders will stay nimble. Downside risks like a breakdown of the triangle or stalled ETF approvals must be managed. The coming weeks promise a high-stakes environment. Data-driven players can use these three core reasons: chart, structure, sentiment, metrics, and catalyst to navigate whether XRP's next leg will be toward $5 or retesting lower levels. The charts and data are pointing toward a breakout narrative. If it plays out, 2025 could be remembered as the year XRP finally rallied to eye-popping levels.